the dollar store and I got flashcards. And I physically went on the internet. I found all the candlesticks, the single candlesticks, and candlestick patterns. I drew them, I colored them in, and then I wrote the definition of the candlestick or candlestick patterns. And every single day when I woke up and before I went to bed, I just ran through those flashcards and read them to myself to start memorizing them and imprinting them in my head. And doing that over and over and over again, you will start to remember them, and then you will start to see them on charts. Now I got a couple book recommendations here that even if you're just starting off or if you've been trading in the market and you're always still looking to grow and learn as a trader, or even a swing trader, I highly recommend these books. These are must-reads, must-haves. And the first one I'm going to go give out here is The Complete Penny Stock Guide. And this book you can find on Amazon for, it's like 15-20 bucks. And this is a very, very good book here if you are just beginning and learning about the market. This is like a glossary to put everything into perspective and just categorize and break everything down for you and put it all together for you. This goes over how to create a watch list, stocks to watch, the different types of markets, the NASDAQ, the OTCs, how to read level 2, times and sales, the bid, the ask, market orders, everything is in this book. He does promote a little bit of his Timothy Sykes Stocks to Trade platform, which I still have to do a review on, but this is overall a good book to read. Jam-packed, filled with information. That's the author right there, Jamil Ben Alich, I believe his name is, but he took a lot of Tim Sykes stuff and just put it all in order and put it all in this book. And I highly, highly recommend this book here. Next up, we gotta go to the Candlestick Man, and that is Steve Neeson. And this is the Candlestick course. This Candlestick course is, I got this book because not only does it put the best stuff from his first 2 books, but at the end of every section and every chapter, it gives you a little quiz, and you can take the quiz and quiz yourself on the candlestick and the candlestick patterns that he talks about in these books. And it's just a great, I'd say, run through to practice with. And it's not that long. It's only like a couple 100 pages long, but he's got demonstrations in this book, and you gotta follow Steve Neeson. Steve Neeson is the Candlestick Man. But what I liked about him is he was very, very, very specific on how he would explain how candlesticks worked, the patterns, very, very descriptive about the candlesticks, and he's really good at teaching you about them. And this is a little quiz part right here where you can they ask you questions and you can answer them. And I believe the answers are at the end of the book. Yeah, all the answers are at the end of the book. But I didn't finish this book. I just read like 20 pages of it. But I do want to finish this book up. Very, very good book. And like I said, he gives a lot of examples in this book with little highlights there to explain what he's talking about. Next up, this is a very must-have for every trader. They have to have this in their library. Have to. And I absolutely love this book. Japanese Candlestick Charting Techniques by the man, Steve Neeson. Highly, highly, highly recommend. You have to have this book in your collection. Have to. This is, I came to this book late. I started learning candlesticks from Steve Bigelow and just looking up on Google and all that. And I wish I came across Steve Neeson sooner. And he's just the man. He really is. He breaks everything down so simply and gives great examples about everything and just puts everything into perspective so easily for you. This is a hardcover book. I got it on Amazon for it was like $40, but if you go to like your local bookstore, I think they might try charging you an arm and a leg for it because there's not really a high demand for this book. So I just simply went on Amazon and I ordered it. Give you a couple pages in here about it. But it's not that long. Like I said, how long is this? Like 250 pages, but every single page is jam-filled and packed with information. And what's also cool about this book is at the very end, he has a glossary of every single candlestick pattern, every candle or stock chart pattern in this book. So you could go through and you can just touch up on your skills every single day if you wanted to familiarize yourself with these patterns. And that's it right here. If I can show you. This is in the back of the book, of the glossary. Candlestick Terms and Visual Dictionary is what he calls it. Just really, really great stuff. I loved reading every single page in this book, and I even love going back and just picking it up and reading it. That's how much I love this book. You'll fall in love with it as soon as you start reading it, trust me. Next up here is his second book. Now with that first book, he's got 2 editions. The first edition is, I believe, all black, and the second edition is yellow. So you want to make sure you get the second edition. It's just an updated version, and I believe he added a few things more into that book. Now his second book is called Beyond Candlesticks. This is a must-have, I would say, but you don't need to run out and get it immediately. This is for more advanced candlestick charts and just candlesticks in general. This is the new charting techniques revealed. So you got Japanese candlesticks, you got point and figure charts. There's multiple charts out there that you can use, and he reveals them in this book. Now if I go through here and try to find the so he introduces different types of charts that you could look at, like Renko charts, Kaji charts, 3-line break charts, and so on. And he just gives more in-depth examples of candlestick and candlestick patterns, and he gives you more patterns that you can go over. There are a lot of patterns that are out there, and there's only really a select few that you really need to focus on and remember, because they just happen consistently and all the time in the market. But the more you know, the better. And once again, what I like about this is he gives great examples of what happens, and he's very, very descriptive when he talks and writes in this book. I love the way he, and this is some of the new charting techniques that he would teach in this book. I'm trying to juggle it here, but here's a few pictures for you. Just apps, and once again, I got it on Amazon. It was like 30-40 bucks. But after reading the first book and falling in love with it, and then seeing that he had a second book, I immediately said I gotta get this book because of how much I loved the first book. And then the last book I have here, it's a big heavy one. This is like the Bible for candlestick charts and chart patterns and whatnot. And what this one is the Encyclopedia of Chart Patterns. Now, this book is amazing. I love this. This is like the dictionary, the encyclopedia, the Bible of stock charts, patterns, and everything. This book is absolutely amazing. I think it'll go for like $50 on Amazon. And there's like 4,000 pages in this book. And that's why I say it's like a Bible. Because the pages are thin and just filled with information. I wouldn't really say that this is a book that you sit down and read page for page. I mean, you could do that if you wanted. But this is more of like a glossary, an index book, to where if you see something, you look it up in this book. And what's cool about this book, and as you can see, I got a bookmark as I tried to start reading this page for page, and it was tough. It just goes over so much information in this book. And let me flip to a couple pages here. And like I said, it's a very, very thick book. Let me take this off. And the overall book is just black with the Encyclopedia of Chart Patterns. Now, I believe there's 2 editions of this as well, and this is the 2nd edition, as you can see right down there at the bottom. So make sure you get the 2nd edition if you were to get this book. Just see that. See, you hear that? That's a heavy book. So what's really, really cool about this book is it has pretty much every single chart pattern that you could imagine, and probably chart patterns that you didn't even know existed in this book. And what's great about this book is it breaks it down in statistics. It tells you how well the pattern works in a bullish market, how well the pattern works in a bearish market, how good the pattern works with volume, how well the pattern works without volume, and the normal range the chart pattern has, the pullbacks, the ranking of the chart pattern, everything. If you're really, really big in statistics and chart patterns and you like making spreadsheets, this book is the one. Let me make myself a little bit bigger so you guys can see. I'll put myself right here in the middle. Just never mind my ugly face. Boom. There we go. So, this is it right here. Gives you a chart right here of the pattern, and it gives you some of the statistics up here. And then as every page that you flip through, Remember, like I said, every page is really thin, so you got to be careful. Gives you more examples of the chart pattern in action. And then, like I said, it breaks it down in statistics for you. So you got statistics over here, and then you got statistics right here where it breaks it down in a bull market up, breakout, bear market up, breakout, bull market down, breakout, and a bear market down, breakout. And like I said, if you're really, really, really into statistics of a stock and a chart pattern, you're going to love this book. And you can just pause the video or take a screenshot of that just to get an example if you wanted. It gives the percentages, everything. Bordering wedges ascending. And this is like a quick glance of the rankings of it out of all the chart patterns. Pretty much every single pattern you can think of. Let me see if there's an index real quick. And like I said, make sure you get the second edition, because there is a first edition to this. And in the second edition, it's jam-packed with more stuff for you. I really need to get back and get into this book, I can say that. This book is just crazy. Index and chart and event patterns. And as you can see right there, gives you a lot of examples. The glossary and methodology. And then a lot of statistics. Just a lot of great stuff in this book. I highly, highly recommend this book. This book will keep you busy for a long time. And this is a type of book you get into and you start diving into, and you get this and you dedicate yourself to this book in the market, you'll start to learn a lot and see a lot that what goes on. So out of 2 books that I would highly, highly recommend, well, there's 3. Hold on. So there's 3 books I would highly recommend that every trader must have in their collection. And that is, the first one is the Encyclopedia of Chart Patterns. The second edition, remember, all right? Now that's this one by Thomas N. Bukowski. The second one, Steve Nissen, Japanese Candlestick Charting Techniques. This would be the number 2 book I recommend. Now the third one, I recommend is A Complete Guide to Volume Price Analysis by Anna Culling. The top 3 books that every trader should have in their collection. Read those 3 books and you are going to learn a lot. The Encyclopedia of Chart Patterns may take you a while, but it's jammed packed with a lot of information. And like I said, I should go back and revisit that book. And then before you get into those 3 books and you are just completely new to the market and don't know anything, read this first, then go over the 3 books I recommended. This is a great book, like I said, for beginners. This is going to break everything down, put everything into perspective and into place for you. It's a lot of books to go over. So let me delete this. And then we're going to start going over websites now. Now, if I go over these pictures real quick, these are just some pictures that I took before. Let me start at the beginning. So these are some pictures that I took before I started this video to try to give you some chart patterns that I like to look out for. Chart patterns that I look for every single day, every day in the market. And that's what it's all about, right? Familiarizing yourself with patterns and then looking for those patterns every single day. And that's where they say trade what you feel comfortable with, trade what you know. One second. Alright, so as you can clearly see right here, this is a U-shaped breakout. This is on the 15 minute, and this is the 1 minute right here. The 1 minute looks to be a lot longer. It took, what, an hour and a half for it to set up, but you can clearly see that this is a big U-shape. It's got a morning panic and a sell-off right here, and then it starts to bottom right here, starts to grind on up, then goes sideways consolidating, and then it just explodes up. And then this is why you look at multiple time frames, because you can clearly see the U-shape right here. And normally a lot of people are buying right here at this break when you have all this room right here to potentially be taken advantage of. And what I like to do is I love watching morning panics. So let's say the previous day was a top percentage gainer. The stock gaps up or just opens at the same level where it closes. What I love seeing is a continuation of it spiking still, or it opens and it panic sells, then it starts to go sideways for a second like it did right here. And you got to be patient. That's why they say patience pays. Let it go sideways and then start reversing and going up. And then when you start to see it make higher lows and starting to see buying return back into it and the volume bars getting bigger with the buying, that's when I like to try to get in on a position. So then I'll get in as it's starting to U-shape up, and then by the time it reaches the resistance here at the open, I'm already up in profit. I can scale myself out of my position, let's say sell half of my position to lock in at least some profit, and then I can test the rest to see if it breaks out, and then I can take profit selling into strength when it's making new highs. Or if it fails to break out at this resistance, I already locked in profits, and if it's getting denied, I'll get out of the trade and walk away profitable. That's the type of stuff you have to consider and look at when trading these stocks. A lot of people, I'm even guilty of it. I would always wait for a stock to come up, go down, and then come all the way back up and try to buy in as it's breaking resistance. And over time, you're going to start to learn when you'll start to learn, and you'll see on these charts, why am I buying way up here when I could have gotten in way down here and be selling way up here? That's what a lot of traders do. And a lot of new traders don't know that, and they're buying at the top of these and wondering why are they always buying in at the top. Over time, you'll start to learn, getting in at these bounces and at the low, and as it's going up and it's hitting the resistance, you're selling your position, and then you have all these new traders and these traders on Robinhood that don't get the advantage that you have and the edge that you have by looking at charts like this, candlestick charts. You're selling your profit and your shares to them. And then look what happens. It comes right back down. And the people that bought right here and it starts to go down, they're panicking and they're selling. And then it comes back up and breaks out. And then they feel really bad and say, well, I should have held on to it. There's multiple ways that you can look at charts. That's why I love looking at these charts every single day. Looking at charts and seeing what's happening and setting up a plan. This is AWX when it just went pure supernova. This is a short squeeze right here. Another AWX, and this is the daily chart. Another pattern you want to look out for are wedges. Wedges love to form on charts, especially intraday charts. And when you can align an intraday chart up with a daily chart, the more the intraday and the daily chart align together, the stronger the breakout will be. So this is the intraday chart for BBOX. You can see it's clearly making higher lows right here, and it's coming up, I'd say right here, and hitting this resistance. Even at the VWAP, it's coming right up to the VWAP, touching the VWAP and coming back down. And it's starting to make higher lows. It's accumulating buying, building up that strength and that power for a breakout. Simply put a trend line on this. This is a little crappy trend line. I should have put it up right here. Put a trend line up on it with a line for a resistance and slowly watch that. And then it breaks out and then it crashes back down. And then this is why I put this trend line on it, because it bounced right off of this trend line. And this is why trend lines are very important. A lot of traders use these trend lines. And these trend lines are going to act as support and resistance, because these are the levels they are buying and selling at. Slowly starts to grind up, making higher lows. And then look at that. If it surges and explodes up from $1.60 right here. No, this is like $1.70 up to $1.90, $2. That's 30 cents right there. Pulls back, and look at when it pulls back, it bounces off this resistance line right here. Now, old resistance becomes support, pulls back, and then it explodes up to 224. And then looking at different time frames like the 3-minute, 5-minute, 10-minute, 15-minute, 30-minute charts, that's when you start to see the bigger picture. See, now with the minute chart, you have all these extra candlesticks you got to look at. When you look at a bigger time frame, like a 15-minute or a 30-minute, it breaks it down, and it breaks it down to a clearer picture of what's happening. And it makes it easier for your eyes to visually see what's happening. Real quick with these candlesticks, what I want to look for on candlesticks, I know a candlestick is strong when it's got a full body. If it's got wicks right here, that means it's starting to lose strength. And this is a great example right here. You have the candlesticks that are full bodied right here hitting this resistance. It comes down, comes back up, and then you have these candlesticks with these wicks right here. That's telling me that this is starting to lose strength and it's getting weaker. More selling is coming into it. And then this is GIVO. Look at this. 2 days for it to go from $3.75 up to $24. This is what I love the stock market. The opportunity is out there. This doesn't happen every single day. This happens once in a while. But being prepared and waiting and having patience and discipline, you will come across stocks like this. History repeats itself in the market over and over and over again. Just recently, we had 3 stocks over summer months that just went supernova parabolic, and that were just great low float trades that just exploded. One of them was GBR, another one was MTSL, and AWX. Just completely exploded and went nuts. And that's when the patience comes into play. You don't have to trade every single day. Every single day, I'm being patient and looking and waiting for an opportunity to present itself. Then when it does, like GIVO here, where it just explodes and goes parabolic like that, that's opportunity right there. But you don't want to chase it. When it gets to a certain point, you got to tell yourself, hey, this is up already 1,000%. This is going to come down at some point, and then look what happened. But you can ride the wave along the way up. Just don't let greed blind you. Another great example right here of another wedge. Making higher lows, hitting this up resistance, getting tighter and tighter and tighter and tighter. Breaks out of this resistance. When it pulls back, you wait for confirmation. Is this old resistance going to hold as support? Which it did right here. And then it got its leg up. From $9, just under $9, I'd say $8.75, all the way up to almost $9.50. Almost a dollar move right there. And then you have your pump and dumps. HMNY going from 73 cents to $2. And then just dumping hard. That's why I'd say it's never really a good idea to chase. You don't really want to chase these stocks. Wait for patterns to set up, patterns you recognize and know. Watch those patterns, and when those patterns are not guaranteed to work all the time. There's a percentage that it works. There's a percentage that it won't work. That's why when I recognize a pattern, I watch it set up, and then when I wait for it to break out of that pattern, either to the upside or downside, and that's when I execute. But I'm also looking at market conditions. I'm looking at the volume. I'm looking at the buying, the selling, the times and sales, the level 2, trying to align as many things as I can to put more things in my favor. And then I draw a line. Okay, how many of the things are in my favor versus how many things are not in my favor? Is there anything else spiking at the moment? And right here, if you can see that line drawn, drawing a simple trend line down, connecting the lower highs. And it's bouncing off of this VWAP right here. So it's like a ball going up, down, looking like it's losing momentum. And then it breaks out of this trend line, pulls back, bounces off of this trend line, which is now holding as support, and it takes off. See what I'm saying? These patterns happen over and over and over and over again. That's where patience comes into key, and that's why I say you have to know these patterns. This is a great example. So we got PED right here. So you see how it broke out of this? Broke out, and then it pulled back and bounced off this trend line, which is now holding as support. If I go back and look, let's see, right here, breaks out, pulls back down. Yeah, you had a long wick right here, but it reclaimed itself and it bounced off of this old resistance, which is now holding as support, and it takes off. And then this is just a low float grinder one day. And this is why I say putting trend lines on stocks is very important. You see a stock is slowly trending up, making higher lows and higher highs. Put a trend line on it, which I did right here. And then lunch hours came literally from noon to a little after 1. It went sideways. And then the trend continued. And then, yeah, it broke it a couple times right here, showing weakness. But it still continued to trend up. And then literally the last 15 minutes of the day, everybody dumped it. I remember this day too. MTSL going from $1.45 to $6.45. A $5 move the whole day. And all you had to have done was just taken a slice of this pie right here. Waiting, having patience and opportunity. Even if you missed this first leg up here during the lunch hours when it was consolidating right here, I would have definitely been keeping an eye on this, because it's still holding its gains. It's slowly making higher lows and hanging in there. Comes up, comes down, and then it starts to trend back up again. Even right here, going from $3.50 to $4, pulling back to $3.75, and then going up to $4.75. That's like a $1.50 move right there. There's opportunity all over this chart. And then here's MTSL again with the 5-minute time frame. You see the difference when looking at multiple time frames. the bigger time frames just make it easier to see and look at. And that's a straight up dump from 645 to 250. That's crazy. A $4 drop. And then here's MTSL again. We got a morning spike from $1 up to a high of 324. Then it trends down. Lunch hours, remember lunch hours, comes in, it goes sideways. And then the stock slowly starts to trend back up. And you see how it's making this big U shape right here? Stocks love making U shapes. U shapes, wedges, and if there's a gap, stocks love trying to fill the gap, up or down. That's why I say it's important to look at charts every day. The more charts you look at, you'll start to notice little things. The more charts you look at, the better you get, the faster you get at doing technical analysis. And like I said, you'll start to notice little things here and there. And you'll start to notice things happening over and over and over again. The same patterns over and over again. Once again, a U-shaped breakout here on SEII, a super low float stock. You can see here, right when the market opened, it spiked from 410 up to 450 and then dropped hard below $4 and then slowly started to make higher lows, grinding itself up, grinding up, grinding up. What's it making? A U shape. Going from $4 and going all the way up to 485. Comes up, makes a U shape, breaks the high of day, and just starts ripping. That's why I say I love looking for U shapes on charts, or I love looking for a panic sell in the morning, and then after it starts to look like it's bottoming out and slowly starting to make higher lows, I love keeping an eye on it and watching it to see if it'll get some type of momentum to work its way up to the open, to where the stock opened. Now, that's why on the Thinkorswim platform, I had a line that put on every single chart of the price where the stock opened every single day. I had a line where the stock opened, and I had a line where the previous day's close was. And I did that because other traders put those on their charts as well. And when a stock starts trending up to the price where it opened, it turns into a psychological thing. The stock is now going from red on the day to green on the day. And when it does that transformation or that switch over, you'll get a surge up in price or a surge down depending on which way, if it's either a U shape or a N shape. That's the last one for that. So then I'm going to pull up the internet here. And this is just a great site for looking up chart patterns, candlesticks, and just the glossary of anything that you need to find. And that's stockcharts.com. And you go to this by going to the chart school, clicking on that, and then go to chart analysis, and it gives you all kinds of topics that you can learn about. all kinds. And today, let's go over chart patterns. And then here's a list of reversal patterns, continuation patterns. So let's see what a double top reversal is. And what I personally did, I went out, I bought a printer, and I went through every single one of these stock charts, and I printed everything. That way, every day, if I got bored or wanted to learn, or while I was at lunch at work, I would pull this out and start reading and start familiarizing myself. You really have to go after what you want and envision what you want to be the best you can be at it. If you put your mind to it, you can do anything. So a double top reversal pretty much is when a stock's trending up and it reaches a price level and then starts trending down and it trends back up here. When the price comes back up to where it did previously and it can't seem to break that level and it comes back down, a double top's pretty much telling you that's the limit. That's the price where it's maxing out at. And that's where you would draw a resistance line right here. And that is a bearish pattern. You'll see them on daily charts and intraday charts. I would go through and read all this stuff, but then that would just make this video way, way, way too long. This gives examples on the... So this is the intraday, and then this is the daily chart. And like I said, this works on both charts, the intraday and the daily chart. Price comes up to a price level, $36, starts to trend back down. Price starts to trend back up, and right here it does kind of like a triple top. It touched here, here, and here. And then it starts to trend back down. And then you can see right here that the price had a bounce, come up here, it touched it here, it trended down, comes back up, and then it touches this again, confirming that this is a resistance now. And like I said before, on charts love making old resistance support and old support resistance. It goes back and forth. And if you look at charts and zoom out, that's why I like zooming out on my intraday charts. So you got your daily charts, and if you get more into detail on an intraday chart, zoom out a 5-minute, a 3-minute, 1 minute, or a 15-minute. It doesn't matter. The more time frames you look at, the better. The more you zoom out on it, like, let me pull up my platform here. Hold on. So if I go to the 2-minute and I zoom out on this, you'll get a better picture and you'll get more into detail of where support and resistance is. And you will clearly see old resistance becoming support and old support becoming resistance, or however that goes. So right here, you could see at one point this was resistance right here. And then now if I come over here, look at where all of these candlesticks are bouncing at. This is showing support now. Now if you follow that line where my mouse is, over to the left where that D is on the chart, you'll see that resistance. Old resistance is now holding as support. That's what you look for on these charts. great example right here. Every stock chart is different, but the concept is pretty much the same on all charts, and you will see it over and over and over again. And this is a great example right here. This resistance right here, if you go to the intraday chart, the 1 minute, 3 minute, 5 minute, and so on, it doesn't really matter. Zoom out the previous 5 days, 3 days, or 2 days. If it's a good, healthy chart, you can easily plot out the resistance and support lines on this. And that's what I did right here. I seen I had resistance right here for a while, and then the stock comes back up to it again right here and couldn't break it, pulls back, and then it broke out above it, and then it comes back down, and look it. It pretty much bounced right off of this old resistance, and then it surged up. Well, I'll say it surged up here, pulled back, and then surged up. And then it comes back down, and it bounces 1, 2, 3 times off of this old resistance here. Look at the 10-day. You can easily do that with any chart. Just simply zoom out on the intraday charts. And that's why I say you got to dedicate your time to this. Put the effort in. The more time you put into this, prepare yourself, and just look at charts, want to grow every single day, you will get better at this. You will. It's simply like the 10,000 hour rule. You practice something for 10,000 hours, you become an expert at it. But with the stock market always changing, it's hard to master the stock market, but you can master chart patterns, candlestick patterns, technical analysis, and just events that happen in the market. And you'll start to notice what moves the market up and what moves the market down. Market trends, when a sector breaks out, there's so much opportunity out there in the market. And then just having the patience to wait for setups and not just get compulsive and just want to buy. It's mostly about having patience and waiting for an opportunity to present itself and then capitalize on it. Also, real quick, if you want to get more into detail with it, which what I like to do, when it comes to these resistance levels and these support levels, simply look at the volume and compare the volume. Simply hover over the volume and see what the volume of each time it touched the resistance line, and you will start to see the strength of it at these resistance and support levels. And that's what I do when I look at the daily charts on these. When I look at the daily chart, if I see I'm coming up to a resistance back here, I'll go back and I'll look at what the volume was that day. So let's say this volume was 20 million that day. It made this resistance high. And I'm just now approaching that high, and volume's at 18 million. So I'm thinking to myself, chances are I am approaching the day high volume for this high resistance here. There's a good possibility that this could break out to a new high because this is approaching the volume high of the previous resistance. Do you get what I'm saying? And this is why you won't see a lot of people make it in the market, because people don't like to dedicate their time to this. They just want hot stock picks. They want hot stock picks, and they just don't want to put the time in. Like I said, they just want hot stock picks. You got to put the time into this. You really, really do. And you put the time into this, you will be rewarded over time. You really will. Alright, double bottom reversal is the same as the double top reversal. Double bottom is just now acting as support. So the price comes down, bounces here at 33, goes up, comes back down, bouncing off the same price level, $33. And this is a bullish reversal pattern. Effective on the intraday and the daily chart. And this is where I say you always want to look at chart history. Price bounces off of, looks like $29 right here. Now when it does this and it's starting to trend down, you're looking back to see where it bounced previously. It comes down, bounces off of 29, and it's got the volume circled here as well. And if you see here, when it bounced off of $29, you keep an eye on the volume bars here, starts to trend up, and you see this long candlestick here with this resistance line. Then you notice this resistance volume bar here as well. Then we got a head and shoulders top. Now this is a popular one. A lot of people know this pattern. A head and shoulders is a bearish reversal pattern. You see it more on intraday charts than you do the daily charts if you're trading penny stocks. And the head and shoulders is 3 mountain tops. So you got a shoulder right here, and then the middle one is the head with the highest mountain, and then the second one should be equal to the proper head and shoulders. The third mountain, the third shoulder, should be equal to the first mountain or the first shoulder. The more equal it is, the more strength it has. And then this is the neckline right here, where the shoulder comes up, comes down to support, goes up to make the head, comes back down, bounces up support right here, and then it makes the right shoulder, and then when it comes down, that's when it crashes. And here's another example right here. You got your shoulder, your head, comes up, makes a little shoulder there, and then it does another shoulder right there, and then it crashes down. Traders love looking for head and shoulders, especially short traders. And you can see the volume bar right there. And then a falling wedge. A falling wedge is a bullish pattern in how you draw a falling wedge is you connect the lower highs of each peak and you connect the lower lows at each low point. And then it starts to form this wedge going down, getting tighter and tighter and tighter. And that's when you start to watch volume. Start to keep an eye on volume and the candlesticks. Same thing again right here. Connecting the higher or lower highs and connecting the lower lows, making a downwards wedge. Watching the volume and then waiting for the pattern to break out. And then you can see right here again, it breaks out, then it pulls back, and when it pulls back, it bounces right off of the old resistance line, the resistance trend line here, and is holding as support. And then it goes up, pulls back once more, making a higher low, and then it's takeoff. So remember that a falling wedge is a bullish pattern, effective on the daily chart and the intraday chart. A lot of people think the rising wedge is a bullish chart pattern, but it's actually a bearish chart pattern. And you can see that right here. The rising wedge is a bearish pattern. But lately, a lot of times we've been, pretty much all summer, we've been seeing up wedges break out. And how you make a up wedge pattern is you connect the higher highs with a trend line, and you connect the higher lows. And you can see it's making this wedge getting tighter and tighter and tighter. Then it breaks out of this bottom wedge here and starts falling. Now this is effective on the daily chart and the intraday chart. And like I said, this summer, we've been seeing this pattern, but we've been seeing a lot of times break out to the upside. Now, again, these chart patterns don't work all the time, like this one. They work a big percentage of the time, but there's still that percentage that it won't work. And then here's another example of it right here, a rising wedge reversal. You connect the higher highs, you connect the higher lows. You either play it while it's in this trend here, or if you're a shorter, you play it when it breaks this bottom trend line here. And look at that volume bar right there. You could see the selling on this increase with each bar going up right here. This is why I like to keep an eye on volume bars and compare the volume bars with the price action. Then we got a rounding bottom. Pretty much rounding bottom is the U-shaped breakout. As I was going over in my charts, watching for a morning panic, then for it to start to base out, making higher lows, and then start trending up, coming up to the day's open or the day's high, and then testing that resistance level and either breaking out or starting to reverse and trend back down. And you got a rounding bottom right here, as you can see, and this is on the daily chart. Once again, this is on the daily chart here, but this can also happen on the intraday chart. And it's saying you can clearly see the U shape here with the chart and with the volume. You see the two big buying volume bars here? Just go through later on and go to stockcharts.com and go through all these and start reading. This is very, very good information on here. And like I said, I'm not going to go through and read all of it because then it would just take up too much time. Then we got a triple top reversal. Triple top is just like the double top. Price comes up to resistance here 1, 2, 3 times, and it's telling you, hey, this is the limit. This is the price limit that it can only reach. It can't go no higher, and that's a bearish pattern it's presenting to you. And then look what happens. Comes up, touches resistance, comes down, touches resistance. And when as many times as it touches resistance and can't break out, traders are going to get tired and give up on it. It's not going to break out. And then that's when you see it start to crash. And then a good example here, when it's bouncing off support, it cracks it and falls, and then it comes up, and now this old support is now holding as resistance. And then it falls more and just dumps. And then you see another example right here. Great example. You got to touch here, here, and here. And if you come down and look at the volume bars here, you can see the volume is starting to decline on this. You see that? That's how you can spot weakness. And then look what happened. It broke down, broke the support, comes up. This old support is now holding as resistance, and then it continues to fall as the selling pressure increased. See, this is a perfect example of why I only pay attention to price action and volume. You can see you don't need anything else really. You got everything being presented to you with the candlesticks, the price action, the price areas, and the volume bars, the selling strength and the buying strength. And you can see the pattern of the buying and the selling with the volume bars. But don't get me wrong, you can use the MACD, the stochastics, and what else is there? There's something else, but in my opinion, all of those are lagging indicators, and those indicators are more suited towards swing traders, long-term holders. You know, I'm a day trader. I trade what's happening at this moment, and I can't really play with or use a lagging indicator when everything's happening at the moment. The only thing I'll use is the VWAP. And you'll see many times the VWAP holds as resistance and support lines. And then I quickly see on a VWAP if the price is above the VWAP, it's bullish. If it's below the VWAP, it's bearish. Then we got triple bottom reversal. And a triple bottom is a bullish reversal pattern. And like I said, it's handy to get flashcards. Write all these patterns down, draw them out, color them in, and just go over those patterns every single day. Every day when you wake up, every day before you go to bed, during your lunch break. Try to go over them. And the more you go over them, the quicker you'll remember them. And then once you remember them, you won't forget them. It's like they're burnt into your memory. So the price touches down right here, comes up, touches support here and here. So what it's doing is the more times it validates support for you, the better. And then you could see too that the price is making higher highs. You got a high here, and then you got a little bit higher high here. And then you could say that this is a little bit higher here, pulls back, then it takes off. And you could see the buying really start to come in here towards the end right here, getting accumulating buying, building up pressure for that breakout. Once again, you got triple bottom. Bottom here, here, and here. They got a trend line here going down, connecting all the lower highs. Then price breaks out of that trend line there, and then look what happened. Comes up when it pulls back. Where does it bounce off of? It's bouncing off this trend line here. The resistance. Old resistance is now holding as support. And yes, it did crack, but then look it comes back up to that resistance again, which was support. And then it touched it, and it comes right back down. So you see right there the importance of support and resistance with these trend lines. Falls down, you got your triple bottom here, comes back up, then it tests this resistance again, right here. 1, 2, 3, 4 times, right here. And then it breaks out. And when you see when it broke out, if you look closely, it gapped up. Too much. So, let me see here. You can see a little gap right there when it finally broke this resistance. And then it comes up, and then you got resistance right here. Breaks above that resistance, pulls back, bounces off that resistance, which is now holding as support, comes down, and there you go. A lot of technical analysis on this one, a lot. And I didn't even go over all of it. But you see the importance of technical analysis and putting these trend lines on charts. Then we got a bump and run reversal. So a bump and run reversal is pretty much just a trend line play, like the MTSL one I showed earlier, where traders just bought and bought and bought all day. It was holding a trend line going up, and then the last part of the day, it dumped off. Watch. This is why it's good to know these patterns, because they happen over and over and over and over again, and I'm about to show you an example. Now watch. You see the resemblance right there? This is continued buying all day, and then it just dumps off. What do you got right here? Continued buying all day, then it dumps off. The 5-minute. Continued buying all day, dumps off. Continued buying all day, dumps off. This is why it's important to know these patterns. A great example right here. They happen over and over and over and over again, and it's up to you to know these patterns and spot them when they occur so you can capitalize on them. This is a great example. And all the bump and run is, when a stock's trending up and it's just making higher lows like this, slap a trend line on it, connecting these higher lows. And every time it comes down to this trend line, people are buying and then riding it up, and then they're selling. Coming back down, buying at the trend line, and then they ride it up and sell into the pop. Then we got continuation patterns. So this is a pennant. So you got your move up right here, and then when it pulls back, it starts to make higher lows, and it's slowly declining in a higher or lower highs. It's just simply pulling back and consolidating. Consolidating is healthy for a stock, because a stock just can't go up and up and up and up and up and up. You know, you got to think of stocks moving up as like a marathon, people running in a race. When people run, they need to take breaks. They need to take a breather. So when a stock moves up, consider as it's someone just ran a mile, and then it needs to take a rest for a moment. That's when it pulls back and it consolidates. And then when it's done resting and consolidating, that's when it makes its next move up. Stock spikes. Normally you'll have a big flagpole, and a flagpole is a big green candle, and then you'll see it pull back, making lower lows and lower highs, consolidating, and then it starts to break out and move up. And the flag pennant typically happens more on intraday charts. They can happen on daily charts. They're more effective though on intraday charts. So which one is this one? A symmetrical triangle continuation. So a symmetrical triangle continuation is simply higher lows, lower highs, getting tighter and tighter and tighter and tighter. And then that's when you wait for it to break out either here or it could break out here. This one breaks out and it continues to run. Also, you can see the declining volume. Again, lower highs, connect those. Higher lows, connect those. And then you could see the declining volume right here. And then it breaks down. It breaks this trend line, and look at how much it dropped. That's why I say I'd either, if the stock's in a pattern like this and it has good range from the bottom to the top, let's say $1 or 50 cents, I'll play it within the pattern. But if it doesn't have range in the pattern, I'll wait for the pattern to break out either to the upside or to the long side, or to the short side or to the long side. But I'm really not a shorter. I'm more of a long trader. Then we got ascending triangles. Ascending triangles can happen on the daily chart or the intraday chart. They happen a lot on intraday charts. They happen a lot on intraday charts. Very a lot. And this is what you look for every single day. And all this ascending triangle is you got a resistance line up here of the stock coming up and it keeps hitting this top price. And when it comes down and pulls back, it's making higher lows. Connect all the higher lows and then draw a resistance line, and you've got an upwards pointing triangle. You can see here on the volume too, the volume is declining. And the stock is getting tighter and tighter and tighter and tighter and tighter. Like I said before, consider it like a bouncing ball. And it's slowly losing momentum and momentum, getting tight, 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 and it's dribbling really, really fast. And then you wait for it to break out either to the downside or you wait for it to break out to the upside. And here's another example as well. And when applying these chart patterns, the lower the float, the better. And the lower the float, the bigger the rip. So if you get in on this before the pattern breaks out and it turns to the downside, you could possibly be hurting yourself because the lower the float, the bigger and harder that's going to drop. Or if it breaks out to the upside, the lower the float, the bigger this is going to rip. And the faster it's going to rip. This is going to be a very, very long video. Then we got a rectangle. In a rectangle, all it is just consolidation. Either at the top or the bottom of a chart. Now you see here the price gap down, price moves up to a resistance here, pulls back to support here, and it just goes back and forth, back and forth. until it cracks the support line. And you can see again, it comes up and it tests the support and it's now acting as resistance. Same thing again right here. All this is consolidation. Coming up to resistance, coming down to support, back and forth, back and forth, back and forth. And then you can see buying right here. And then the stock breaks out. You could see this on the daily chart and the intraday chart. You'll normally see this during lunch hours because there's not really many traders trading during lunch hours and there's no volume in the market during lunch hours. And then we got a price channel, pretty much the same as the last one, but then it's in this channel either pointing down or it would be pointing up. And you just simply connect the lower highs and the lower lows. Or you connect the higher highs and the higher lows. This one, in this instance, is pointing down. And how I would trade it is buying at support. When it comes up to resistance, sell. That's just a pattern that you would just keep repeating over and over and over again. More effective on the daily chart if you're a swing trader, but you could also do it on the intraday chart too, depending on the range. You know, if it's a range of 10 cents from the resistance to the support, it's not worth it for me. But if it's got a big, nice range of 50 cents, 75 cents, yeah, I'll take a swing at it, buying at support, and when it comes up to resistance, selling it for a profit. And with these, it could break out either to the upside or the downside. But more likely, it breaks with an up channel, it's going to break out to the upside. But charts are not perfect. They don't work all the time. Measured move, bullish. So the measured move is a three-part formation that begins as a reversal pattern and resumes as a continuation pattern. The bullish measured move consists of reversal advance, correction, consolidation, and continuation advance. Because the bullish measured move cannot be properly identified until after the correction consolidation period, it is categorized as a continuation pattern. The pattern is usually long-term and forms over several months. So what it's pretty much saying is you got your move up right here, and then you got your move down, but this is simply just consolidating, resting before its next leg up. That's all it's saying. So you got to move up, then it takes a breather or a break and consolidates and pulls back, and then it starts to move back up and break out and have its next leg up. So it's like a race. You got your running, then you take a break and rest, taking a breather, and then you continue the race. And once again, the same thing here. You got your move up with your respected resistance line and your support line. Then it pulls back, taking a break, consolidates, and then you got your next leg up right here. and then a measured move bearish. The same thing as the first one, but the opposite. And then we got the famous cup and handle. Now the cup and handle is literally just like the U-shaped breakout pattern, but the cup and handle, when it comes up and forms the U, it doesn't break out at that resistance. It simply just pulls back, and then it comes back up, and then it breaks out. That's why they call it the cup and handle, because it forms this cup with a U, and then it forms another U right here, forming a little handle where you would put your fingers to lift the cup up. And that's a cup and handle. You'll see these most of the time on intraday charts. I don't really see them that much on daily charts, but it is possible to see this on a daily chart. And again, right here, you got your drop off, then it starts to base right here, then it starts to trend up, comes up to resistance, pulls back more, starts to move up again, and then breaks out. That's all the patterns for this one. But there are so many patterns that you can go over. So many. See, in that one big section here, chart patterns, that I just went over, like this, that was just one little category of all these categories here that you could go through. Look at that. Filled with information. Filled. Candlestick pattern dictionary. And then this is when we get into our candlestick patterns. Crazy. Just check this site out. It's stockcharts.com. You will get lost and spend a lot of time in here because this site is very, very cool. Stockcharts.com. Come over to Chart School. Click on that. And then go to Chart Analysis. And then simply click on any of these categories to go over anything you'd want to learn. And then if you go back one more, there's also all kinds of categories right here you could go over. And cool article topics that you can read. But real quick, is there any comments that or questions that need to be answered? And ask them now or forever hold your peace. Alright. I'm sorry this is a long video. A lot of my videos are long, but hey, the reward is for the person that watches all of these videos, because I know I fill all my videos with great content. I know I do. And give great examples and the psychology and all that stuff. It's up to you to want to do this and go through it. And if you want to learn, you will apply yourself to want to learn. But that's it for this one. Thanks for joining me on the live stream. I'm going to try to do these a lot more often because it's easier than just making a video and then editing the video and then uploading the video when I could just do this. But if I record a video, it is shorter, but just going through and editing sucks. But make sure you hit that subscribe button. Leave a comment if you have a question. That's it for this one. Until next time, guys, stay patient, stay disciplined, and study, study, study. Alright, guys. Later.